Forget about all of the
Okay.
noise. It's the best performing asset in all recorded history,
Mm-hmm.
right? It does 140% a year returns, and that's including 3 or 4 80% drawdowns, right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. We've been given something that can unfuck your future.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Raoul Powell in a conversation about these topics and more.
Crypto markets tend to go bananas. So that is, we're talking currently the total market cap of crypto is about $2 trillion. By the end of this cycle, it'll be at 10 to 15 trillion. I mean, that's la land returns. But that's crypto. Crypto gives that kind of opportunity. The NASDAQ's been following this perfectly. So it just keeps going, whether we get another 20%, 50% upside in the NASDAQ, or it could be more. We don't know. You can't really tell. But the point being is the gains are huge. We'll also see commodities picking up. We'll also see, we've seen precious metals picking up. We'll see all parts of the economy and the stocks picking up as the economy's growing. Inflation's not yet a problem. And the central banks are cutting rates and adding liquidity to finance their debts. That's utopia. That's what macro summer and macro fall. It's basically market utopia. We've talked about the Fed put for years, but we didn't really understand what it meant. What it is for is, listen, if you've got a lot of debt, your collateral is what you pledge against the debt, right? The whole system is built on this. That's what blew up in 2008 because the house prices went down and everyone's loans were this high. But if you think of the whole system, all the banks and all the asset management firms and all the leverage and all the private equity and all of the stuff, they don't want the equity to go down because that's the collateral. They allowed the bond market to go down because in the end it gets repaid. So it's a mark-to-market loss. But in equities, when you've got this massive retirement system, you just don't want that. So this Fed put is part of the everything code where they've just stopped that event. So they debase currency to erode the debt, make the interest payments, because if not, they'd never be able to pay the interest, because you'd eat up all of GDP growth just to pay this interest, because it's 100% of GDP. And they stop the big bad event. So what that gives you is the greatest macro risk-taking opportunity of all time. Doesn't mean the business cycle's gone, but overall, you've got the best risk-taking cycle in history.
Right now.
Yes, and it's been going, and I didn't really realize it, but it's actually been going since 2010, and I didn't really see it, but now it's so clear that all the central banks understand what they're doing, they understand the entire game, they understand that they need to monetize the interest payments. Really, since 2012, it's super picked up, and we would not have had a recession were it not for COVID, because they've basically made it very difficult to happen. Because if you think of recessions, they're driven by the credit cycle mainly. And if you don't want credit markets to get stressed, then you don't have recessions.
MicroStrategy has purchased an additional 19,452 Bitcoin, worth $1.026 billion, pushing its total Bitcoin holdings to 90,500. This trend of corporate Bitcoin accumulation is growing, with companies like Tesla also increasing their positions. MicroStrategy's recent $1.026 billion purchase brings its total Bitcoin holdings to 90,500 BTC at an average price of $23,985 per Bitcoin. The company's Bitcoin strategy has evolved rapidly since its initial investment of $425 million in 2020. CEO Michael Saylor has become one of Bitcoin's most vocal advocates, promoting the cryptocurrency as a superior alternative to holding cash. The company continues to view Bitcoin as a long-term asset that can outperform traditional currencies. Tesla joined the trend in February by purchasing $1.5 billion worth of Bitcoin, aiming to diversify and increase the return on its cash reserves. Saylor has encouraged other companies, including Tesla, to follow suit. MicroStrategy believes that its Bitcoin strategy complements its core software business by increasing brand visibility and attracting new customers interested in cryptocurrency. As more companies adopt Bitcoin, corporate interest in cryptocurrency is rising. MicroStrategy's ongoing investments and Tesla's entry into the market signal a growing shift toward digital assets in the corporate world.
Liquidity really comes from central banks and governments putting money into the system. So we have something in the US called Fed net liquidity. So what is the three component parts of that state level liquidity? Well, that's driven by the Fed balance sheet, quantitative easing. They're still tightening, but they've reduced the amount of tightening. Then we have the reverse repo. And that is basically where banks mop up all of their funds. So if that's very big, money's tight. And when they start taking the money out, it goes into the banking system. The other side is the Treasury General Account, which is the checking account of the government. Now, if they've got a lot of savings and they're not spending it, which is where we are today, then conditions are tight. But once they start writing checks, what happens is that money floods into the system. And that is a kind of a net increase in money into the system. So if you make more of something and it's in abundance, its purchasing power or its value declines. So it's not that necessarily you and I get to borrow money more easily. It's not that. It's that there's more money around and it debases currency. It's like this magical thing that happens. Now, on the private sector side, the stuff like M2 growth and private sector credit growth is kind of a function of that, but they both work together because you can create dollars in a Eurodollar system. You can just create them out of thin air by being a bank. And so what happens is there is this huge increase in money that happens. But we as people don't generally get it. Sure, your mortgage rate may fall a bit, but really it's this debasement effect that happens that's more insidious that we don't see and don't really understand. Asset prices take off, but our earnings don't. So therefore, we get poorer in terms of the assets we can buy. And an asset is just future deferred consumption. If you buy gold today, your expectation is you can sell it in the future at a higher price to protect your purchasing power. But today, you can buy less gold than you could a month ago and less gold than you could 5 years ago, and because your wages don't go up in the same as these scarce assets that move because of debasement, which is why property prices, I mean, when I bought my first flat in London, I was in finance earning a decent salary, but I was young. I was like 24, and it cost me 3 times my salary. If I were to look at the same kind of person, 24-year-old, work at an investment bank early in their career, the same apartment will probably cost 10 or 12 times salary. That's debasement.
Former Chinese Finance Minister Liu Jiwei called for China to study cryptocurrency advancements, particularly in light of the U.S. Securities and Exchange Commission's (SEC) approval of Bitcoin ETF. He warned that cryptocurrencies pose potential risks to global financial stability and emphasized the importance of monitoring international crypto policies. During a speech at the 2024 Tsinghua Wudaoku Chief Economist Forum, Liu Jiwei urged China to study the global impact of cryptocurrencies, warning of potential risks to financial security. Liu highlighted the significance of the U.S. SEC's recent approval of Bitcoin ETF after years of rejection. He urged Chinese policymakers to closely monitor how the U.S. integrates cryptocurrencies into its financial system. The former finance minister warned that cryptocurrency volatility and the risks of money laundering and terrorism financing require careful examination to protect financial systems. Despite its 2021 ban, China still controls over 55% of Bitcoin mining, though U.S. mining pools now manage around 40% of operations, a shift noted by CryptoQuant CEO. Liu Jue's comments highlight growing global interest in cryptocurrency regulation and adoption, particularly as major economies like the U.S. shift their policies on Bitcoin ETF. U.S. spot Bitcoin ETF attracted over $1.1 billion this week, the highest inflows since mid-July. Leading the charge were BlackRock, ARK-21 shares, and Fidelity, which saw a combined $994.6 million in inflows. This surge follows the Federal Reserve's recent interest rate cut and Bitcoin's subsequent rally. Bitcoin's momentum, coupled with strong ETF inflows and supportive monetary policy, signals a potentially bullish Q4 for the cryptocurrency market, with Bitcoin historically recording significant gains during this period. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.